Hey guys, Rafi here from the Endgame Investor. And today we're going to talk about dogs chasing their tails and why the first revolution of the dog chasing its tail of a hyperinflationary spiral has just been completed, and it will continue throughout 2022. For a dog to chase its tail in a circle, three parts are required. First, you need the head. Then you need the body. And of course, you need the tail. The body connects the head to the tail. The head is the consumer. The tail is the producer. The body is the employer. Once they all start anticipating price rises from each other, the dog keeps spinning and spinning out of control until it falls over. And that is the crack up boom. Let's get to the evidence. The first component of the hyperinflationary dog chasing its tail is the producers. That is the tail. It will be chased by the consumers. Once the producers start to hike prices in a preemptive way to get in front of their cost and maintain their profit margins, rather than waiting to hike prices in order to keep market share, that is the first component to the hyperinflationary dog chasing its tail. Here we have Javier Blas, a tweet from the commodity analyst for Bloomberg, and he says, commodity inflation, the new year is going to bring lots of price increases as retailers update their prices. The trend is already underway. Take a look at the support Twitter handle of some of the bigger brands, for example, IKEA UK below, and you will see lots of cases. IKEA UK, somebody asks, can you tell me why products added to my basket yesterday, December 20th, have increased in price by 25 to 40% overnight? IKEA UK support says, hello, due to increased costs across the supply chain, including raw materials, transport, and logistics. We have tried for as long as we can to absorb the costs. However, we have now applied a price increase to a lot of our ranges, and these will now be the current price, says Vicky. So you see, IKEA has been trying to hold back price increases for as long as possible, which is a rational decision, but now they cannot anymore. And a lot of these price increases are going to kick in come 2022, which is why even if they rejigger the CPI, it is not going to be able to absorb all the price increases that are scheduled for 2022. On the right here, we have from the New York Post, if you think your grocery bills are high, wait until next month. A fresh wave of supermarket price hikes is expected to begin in January, raising prices anywhere from 2% to 20% on a slew of staples, including pasta, condiments, soups, cookies, produce, dairy products, and meats. According to a report, a soaring inflation rate of 6.8% as of November, the highest rate of increase in 39 years, shows no signs of slowing down, with major food manufacturers preparing to raise their prices once again, according to the Wall Street Journal. Persistent supply chain disruptions and increasing labor costs are a major factor in the increases. Kraft Heinz, which makes Oscar Mayer Lynch meats.
As if I were an Oscar Mayer wiener.
Kraft Macaroni and Cheese. And Jell-O pudding.
Fat-free Jell-O pudding.
Told retailers it is planning to raise prices on some items by as much as 20%, according to a memo viewed by the paper. Here's something that I garnered from the Tyson Foods latest earnings call. And here I want to show you how food manufacturers, food producers are now changing their mentality from holding back price increases to anticipating inflation and trying to get in front of their cost structures. So, says Tyson Foods in its latest earnings call, in parallel to our actions to improve volume, we have also worked to recover inflation through pricing, achieving a 13% price improvement for the fiscal year and a 24% increase for the fourth quarter. In this dynamic environment, we will be aggressive in monitoring inflation and driving price recovery activities. Aggressive in monitoring inflation, which means preemptively raising prices before their costs go up, which means they are in their own tail chasing spiral. Let's continue. Remember Kraft Heinz? We just cited them from that New York Post article. Kraft Heinz, latest earnings call, same change in psychology. We expect to see similar level of inflation at the beginning of 2022 as we are seeing now in the second half of 2021. Most of the inflation that we're going to see is carried over for 2021. We expect to enter 2022 having executed the price plan that protects our profitability from current levels of cost. You can see that today, with all the inflationary pressure that we're seeing in the gap that we're having between the price realization and the cost inflation, we're keeping the gross profit margin the same level that we had pre-pandemic. So they are preemptively increasing prices for 2022 to maintain the same level of profit margin, assuming the same level of inflation for 2021. So they are preemptively raising prices to keep their profit margins. What is next? This is the tail of the dog. Who's got to chase it? I want to share with you a comment that I got from a subscriber to the Endgame Investor. And if you want to support me, you can get a 2-week free trial by clicking the link in the description below. You'll get a lot of these types of comments with people on the ground telling me and telling the community what is going on. And here we have an instance of consumers trying to get out in front of the inflation curve as well. We decided to make an inflation play by trying to get 0% financing on a brand new vehicle, since you really can't get that rate on used. So we decided to get a 4-door Ford pickup, placed order online, went to dealership expecting to put it down a deposit. Dealer didn't want a deposit, says, "Do you see my lot out there? I could care less if you back out of this purchase," he says, "because I need vehicles and I know I will sell it right away. So why can't the dealer order the vehicle just like me?" He says Ford prioritizes retail orders straight to the consumer first, and dealers are limited in what they can get right now. So dealers have been faking retail orders to get more inventory. Because of that, Ford has started to require identification from retail customers like me. Also, the vehicle will take months to get, could be close to a year. I would not be surprised if it's worth more in paper money when we finally get it, kind of like a PS5, meaning preemptive price increases. The resale value of our Chevy Volt has actually been going up recently. The economy is broken and just waiting for a Lehman Brothers type trigger. So we have the consumer, we have the producers, both trying to get out in front of inflation. What is the only missing part? The body. The body are the wage increases so that consumers can afford the preemptive price increases placed by the producers. And here we have evidence of that from an article by John Rubino of Dollar Collapse. Now fast forward to 2020. For millions of young people around the world, work had turned out to be worse than pointless. Most available jobs paid subsistence wages in return for unending repetition and little hope for promotion. The prospect of a lifetime waiting tables or sitting in a corporate cubicle was as soul-destroying as it was inescapable. Then came the pandemic, during which governments, not understanding the genie they were letting out of the bottle, told millions of millennials to stay home for an entire year. A huge number of 20-somethings now live with their folks or with like-minded roommates, work sporadically to cover their minimal basic expenses, and then do whatever else they want. Life has become a modern version of a Parisian cafe, hopeless in a career sense, but low stress and frequently high fun. As the pandemic winds down, companies are calling their former drones back, and a shocking number are saying no thanks. Jobs are going unfilled, orders unshipped, and customers unsatisfied. This brings us to the financial point of the story, which is that employers are going to have to pay up, in many cases, way up, to put the hamsters back on their wheels. No matter what the government or the BLS or the Fed or whoever is counting it does to the CPI or the PCE or whatever stupid inflation gauge that they're using to gauge inflation or price inflation on the consumer level, they will not be able to stop the price increases that are coming because it's happening preemptively now. Once those psychological changes kick in, then you have the dog chasing its tail with the body of wage increases. And no amount of rate hikes are going to stop this. Is it going to all end in 2022? I do not know for sure. But what I can tell you for sure is that the psychology is changing and the crack up boom is getting a lot closer. And you have to be in to real money before it explodes. This is Rafi with the Endgame Investor. Please support me by either signing up for a 2-week free trial of the Endgame Investor or sign up to support me on Patreon to get exclusive content of my commentary, my libertarian-leaning commentary on the Bible. And everybody have a happy, healthy, and hyperinflationary New Year 2022. See you next year.